Everyone, it's Penny. I am doing a portfolio recap. I'm going to do this in two separate sections. So the mining one is going to be separate. This one is going to hit my primary companies. And I, of course, have to start it out with Aduro. That has been my baby since IPO. So Aduro right now is trading around the $4.30 mark. That gives it about $125 market cap, $125 million market cap. And they right now have a $50 price target on them that has just been reiterated. They've had some pretty good news recently. They're sitting on $8.4 million cash. They are expecting their next generation process pilot plant to be commissioned in Q3. And they just, they've completed the basic engineering design for it. They also filed a new US patent to enhance their hydrochemolytic technology. For those of you that aren't familiar with hydrochemolytics, it is a water-based technology. It also serves to upgrade like heavy crude, make it much more valuable. There are some renewable fuels applications, but like the basic story is Aduro can recycle 4 out of 7 types of plastic. In a world where only 9% of plastics are getting recycled and where, plastics are hydrocarbon. Hydrocarbon is fuel. This is a resource. It's not just a problem in our landfills and in our water. It's a solution to a lot of our energy independence. So I'm really excited about Aduro. They got hit pretty hard when the market crashed. They've been rebounding pretty steadily. I think their high since uplisting to the NASDAQ has been about $7. So right now being around $4.30, I'm happy with that. Their best competitor on the market is PureCycle. PureCycle's got about $1 billion valuation. I think they trade around $550 for what that's worth. But they're capable of recycling one type of plastic. They have a plant, they have a massive amount of debt, but it's one plastic. Aduro's sitting here with 6 multi-billion-dollar clients in their customer pipeline that are, reviewing their technology. It is real technology that can be world-changing and portfolio-changing. So at least keep an eye on that. So that's Aduro. All right, next up on my list is LEEF Brands. They are a major cannabis concentrate producer in California. They're EBITDA positive with $30 million in revenue for each of the past 3 years. Their market cap is about $21 million, and their 1,900-acre ranch in Santa Barbara County has been valued independently at $40 million. So it's not on the balance sheet, but I just want you to take that in. $30 million in revenue, EBITDA positive, $20 million valuation, and they own a $40 million chunk of land. So they've just started planting 700,000 little seedlings on 65 acres to become one of the world's largest cannabis farms. By June, those should be about waist high. This move is what you really need to pay attention to because their cost of goods sold, right? Their cost per pound is going to go from $25 to $12 or less because they're growing it on their own now. So I want you to do the math there. This is a much hated sector of the market, but rescheduling of cannabis would be a massive catalyst for the entire sector. So additionally, LEEF signed a binding letter of intent to acquire a tier 1 processing license in New York. So marking its entry into a much higher margin, $1.5 billion cannabis market. So I know a lot of people aren't interested in investing in cannabis, but this entire sector was hit, dropped about 90% across the board in value. And LEEF just had a private placement become unlocked. So we saw a lot of selling last week. So this is a good entry point. I'm actually picking more up here. So that's LEEF. All right, next up is CISO Global. They're trading at around 50 cents with 31 million shares outstanding, giving them a market cap of around 15.5 million. They are expecting 39 million in revenue for next year. That puts them at about 0.38 times revenue. Industry standard is 8 to 12x, which would put them at $10 to $15 per share. So I don't think that's going to happen immediately, but I do expect it to be going up. They have a meeting this week, and I'm hoping to hear their plan to combat the manipulation that's been rampant in their stock. And now it looks like this is mostly retail held, so it's definitely gotten a lot better. Either way, know what you own and expect volatility. If you intend on selling, stay away from round numbers and stop loss rates. Last week, we heard from them that they're entering the insurance industry with CyberSimple. This is on their Checklight platform that runs 24/7 and has about 75% margins. as it is software. Again, cyber insurance is going to be a $50 billion industry in short order. So keep your eyes on CISO. Next up is Metacenna, which I've covered in a couple of deep dive videos. And if you're interested, definitely watch those because it's more complicated than I can put in a quick update. But Metacenna is currently running trials with their cancer drug, MDNA11, for solid tumors. It's shown promising anti-cancer results as a monotherapy all by itself and also in combination with Keytruda. The combination therapies achieved a 78% disease control rate. They've had a complete response in a patient with advanced anal cancer, partial response in a colorectal cancer patient. But the preclinical studies also showcase MDNA11's potential in preventing metastasis and promoting long-term survival in triple-negative breast cancer models. So looking ahead, they will be presenting new data at the American Academy of Cancer over the weekend. I'm really excited about this. It's biotech. Biotechs are always risky because you never know what's going to come out, but this has shown really good durability. It's basically a drug that is not making people sick, which if you know anyone who's gone through cancer treatment, that is the real difficulty. Sometimes a cure is worse than the disease. So I'm really excited to see where Metacenna goes. Their trading's been all over the place. Sometimes, like earlier last week, it broke out of the 50-day moving average and got pushed down just before close. This is getting to the size of the trial where other companies are going to be noticing, and there have been massive, like multi-billion-dollar takeouts of companies in this sector that were not even as far along as Metacenna, and Metacenna has had amazing results. So I'm really looking forward to what they have to show this weekend. But if you want a deep dive and much more technical, check out my channel. I've got a couple hour-long deep dives if you're into that stuff. All right, the last company that I really need to do an update on here is Charbon Hydrogen. Charbon has been in this wait and see phase where we are waiting for them to get funding. They have everything set up for their first clean hydrogen plant, and they have a total of 16 planned all over the U.S. So they really need that first plant going, and it has multiple phases. But even in the first phase, it will be profitable. So I think from the time of them getting their funding to actually having everything up and running, because this is plug and play, it's only going to be a matter of 2 to 3 months. So this is one where I will say that hope is not a strategy, but we're in the place of hoping they close their financing soon, because it is the last piece needed for this to be very successful. And things have only been looking up in the hydrogen sector, and I should say in gases in general. So Charbon Hydrogen, still in my portfolio, still on my list, and I'm excited to see where it's going to go.